Welcome, everyone. Welcome, welcome, welcome. I am so excited to be here. I mean, normally we do this on a Friday, but this episode that was just finished airing on EB Radio through womanemergeradio.com was fire. And when I tell you, I was sitting there listening to Mr. Chamblee talk about the infinite banking and how to use this policy, that we decided to do it differently. We're coming on live today and we're going to replay this again on Friday. So, hey everyone, I'm Melissa Lambert. I am a corepreneur. I'm also the CEO and visionary of Lambert Legacy Financial, powered by Core Financial Partner. And it's always an honor to have Mr. Tony Chamblee. He is the CEO and the visionary and the president of Core Financial Partner, and he's my mentor. And I love the fact that this man has so much knowledge, and every time he comes forth and bring this information, it's like it lights me up because finally somebody is talking about the truth about money. And I'm just thankful, Mr. Tony Chamblee, for you, sir, for just your diligence, for your knowledge, your wisdom, your understanding, and for you not keeping this information a secret. So welcome, Mr. Chamblee. We're so glad to have you, and we're going to go and dive right in to this information on today's tale. Tell us a little bit about who you are. Tell us a little bit about Core Financial Partners.
Sure.
And I always ask you the mission and the philosophy behind us. So talk to us and tell us a little bit about Core and yourself.
Well, sure, absolutely. And thank you, Melissa, for continuing to believe in what our message is here at Core Financial Partners, for you to have these platforms for us to be able to share the truth about money and to share how it really works when it comes to the infinite banking concept. Once again, my name is Tony Chamblee. I am the CEO of Core Financial Partners. And to share who I am, I'm just a man that really got behind that we're not getting the truth about money. I felt like some years ago, it's been about 20 years now, that we've been financially indoctrinated versus financially educated. And by watching a lot of my colleagues, along with myself and my wife, go and really make a tremendous amount of money, we 5 to 6 times our income in a few years, and being locked arms in an organization along with entrepreneurship, I watch all of us also fall to our demise of our relationship with money, because we knew how to make money, but we didn't know how to sustain it. We didn't know how to advance it. And through reading a book in 2007, Melissa, a book called Why We Want You to Be Rich, it changed my perspective and my view of what I need to focus on, right? And that's the date. I remember it was the summer of 2007 that I read that book. And I haven't put financial books down. I haven't put economic books down, economy books, things of that nature ever since. Business books, they all tie together. And so, I'm just an entrepreneur that went full time in 1999 and learned 7, 8 years later that it takes more than that. It takes understanding money to be financially successful or be successful and be able to leave a legacy what most people want to leave. So from that, Melissa, we end up building our platform. Our platform stands on our mission. Our mission is a 4S mission. And a 4S mission goes like this. We believe everybody starts off at survival, and then security, and then success, and then significance. That's the 4S, right? That's the 4 S's. Survival is normally when you're just getting started in life and you're really not at a place where you can really have an emergency fund in place and everything else around it. And so that's when you're in survival, right? When you're in security, you put away 6 months of your income along with growing it beyond that as well. And when you put that in place and you've got everything in order, in the right fashion, the right way, you then can move the step to what we call success. Success is now taking those reserves, emergency fund beyond, and buying income producing assets, right? Putting yourself in a position to spend the money on something that's going to make you money and not on, just materialistic stuff. And so I had to grow to that. And I had to learn that the hard way as I went over what happened. And so that's success, buying income producing assets. And then from there, once you have done that enough times, you're going to see that significant is now there because you've already kind of mastered the game of money and how to have financial success. And significant is all about leaving a legacy. Who are you going to look back, or who are you going to leave behind the blueprint to financial success, right? We all want to should be in a position to leave a legacy, because leaving a legacy is what you've done, you're left behind for others to benefit from and to learn from. What you do for yourself dies with you. So we want to leave a legacy. And that's what our culture is all about, our community is about, and our company is about. And that's all came from what was happening to not just myself, everybody almost around me. And so that's where our mission derived from that. Then from our mission came our vision, right? To be able to get to significant, it takes a vision of knowing what's going on and getting educated to be able to prosper, right? So our vision is to bring awareness and financial education that bring prosperity. So that's our vision. And then last but not least is our philosophy. Our philosophy is that more money doesn't get or keep you out of a financial situation. Only financial education does, right? Only financial education does. I was of belief that work hard, work to your bones, work like a dog almost to make financial success to happen for you. That's not true. Most people that get a lot of money, whether they work really diligent to get it or they was fortunate enough to get a windfall, they end up losing that money when you don't have true financial education and you're living off financial indoctrination. You're living off common versus uncommon. And so we believe that you want to play a part in your own success by not going by what everybody else is doing or what everybody else is saying. You have to be a part of the growth, educational growth that has to happen in order to have true financial success and then pass on to a legacy for your family, your community that you desire to leave that information with or share with as well. So that's why we have such a philosophy like that, because it's too many stories out there, Melissa, of people that get fortunate enough to rise their careers above the average person. Too many people that end up having talents that pay them tremendous lifestyle. And people that win the lottery, is more stories of them falling and end up being worse than they are after getting that money than they were before they got the money. As many people have that story. They end up being worse off later in life than they were, the track they was on before they got the money. So that's what we believe in and narrow down is financial education and understanding and awareness.
Wow. I love one of the greatest thing about Core Financial Partners, which I have adapted to this concept now than ever before, is we don't want your money first. We need you to get the knowledge first.
That's right.
Because if you can get indoctrinated, and I was talking to a lady today, and she got me on fire. Before we actually listened to our live that we were listening to for the radio, I call her Lady C, and she has agreed to host a seminar for me to do a private session for her and her family, now knowing the truth about money. And I said something to her, Mr. Chamblee. I said, you know what's so crazy about people? They will tell me they want to think about me telling them how to control their own money. How do you want to think about how to control your own money? And you work so hard for something that you don't have control of. Right. Make that make some sense. I said,
Yes.
why would you tell me after watching this information, after seeing what this is, you're going to tell me, oh, I got to think about it. Understanding we're trying to put you in the position of being the bank. Understand something else. I said to her, I said, Miss Steve, just think about it. If anything happens to your money in the bank, they have what we call insurance on your money.
Mm-hmm.
And I said to her, if you think about it, if we move the bank out the way, let me say, if we move ourselves out the way, take all our money out of the bank, they're left with no business because you are their business.
That's right. That's right. The banks don't. Go ahead. I'm sorry.
No, go ahead. I want you to say this because I get excited.
The banks don't have money to lend to us of their own money. It's our money they're lending back to us. They don't lend their own money at all. They don't have money to lend. Yeah.
And the crazy, not only do they lend our money, they lending your money to me too, Mr. Chamblee.
Exactly. We're one to them. We're just an entity of everybody's one to them. Like the numbers on the ledger, it's added up to one. It might be somebody with only $10 in there, but somebody else has $1 million. It all is one number to them.
One number. And what blows me away was when I saw my dividend last month. My dividend was 10 cents. No, it was 2 pennies. My dividend from Navy Federal was 2 pennies. And I was telling Miss Lady C, I said, Lady C, I want to show them. I will personally show them my personal bank with infinite banking so they can see the growth of my own dividend.
Yeah.
Like now that I know this information, Mr. Chamblee, I am going to shout it from the mountaintop as much as we can to let people understand, guess what? The same control the bank has on you, you can have control on it.
Yes,
I'm going to repeat that again. The same control the bank have on you, telling you for years, oh, you have to get a checking and a savings account. Make sure you have some money in your savings account. Not understanding they're using your savings to make more money on, and then later on give you a little something called dividend, which is a couple of pennies or so on your own money.
Right.
Then they put it back in, making it seem like it was never missing, right? Not knowing it's been on the market making money. Money don't make money sitting. Money makes money moving. If your money ain't moving, it's not making no money. And then we interrupted, Mr. Chamblee. We're going to talk about this soon, but we interrupt our own money, expecting to see our money grow, not understanding it's uninterrupted money that grows your money.
That's right. Yep.
So, Mr. Chamblee, we are here today, and we're going to talk about something. I'm going to put the topic that we're talking about. We're talking about how to best use an IBC policy as your own bank. And IBC stands for Infinite Banking Concept.
Yep.
I love how you went in on earlier on when we were live on the radio. Again, this radio is featured, this topic that Mr. Chamblee just talked about at 6:00 Eastern Standard Time. It was featured in 172 countries, and it will be tomorrow uploaded on 13 top podcasts, including YouTube, right? So we wanted to go live with this information and let you see Mr. Chamblee's face, let you hear from him, and let him literally go deeper into this concept. So when we talk about this concept of infinite banking and being able to use this policy as our own bank, what are the key benefits of using an IBC policy as your own bank compared to having a traditional bank?
Yeah. One of the key benefits I would start with is that you're going to be the one in control. It's real clear, and based off my learnings and teachings and being mentor about the truth about money and the truth about banks and why you want to be the bank and do what they do and not what they say. The number one reason would be because control, right? The one who's controlling it can leverage it, and the one who's leveraging it can now allow it to grow at the pace that you desire, not what someone else is desiring. So that is the number one benefit of having your own banking system, become your own banking, infinite banking versus a traditional bank. Another reason would be because you can now go from just being the borrower of a situation from needing money to now being a bank that's borrowing from your own banking system. So if that's the case, then that means that if you're the bank and you're controlling it and you're borrowing money, you can pay it back at your discretion, right? If you was in control of your own bank and you could get your business underway and you can charge interest at the amount that you desire, how much would you charge interest for profitability for your business or for your bank? Well, you have that choice now. The other thing is you don't have to worry about when you need money for a need, want, or desire. You don't have to worry about going through a process and showing credit, having a credit worthiness to be qualified for a loan. Once you've set this up and you've been approved to, have this a part of your lifestyle now, your credit worthiness does not come into play. And I'm not saying to let your credit go because of it. It's other reasons to use good credit. But once you set this up, it's taken some years to fund it to the point you almost can finance almost anything in your life. Well, Nelson Nash took 13 years. So I believe some people are doing it faster. Some people are taking a little bit longer. But once you have done that, I'm talking about anything. I'm talking about even a home purchase that you'll be able to do if you do this properly. So that's another factor. The other factor is you don't have to worry about debt to income ratio. Debt to income ratio gives you an advantage of having your own bank versus a traditional bank, because that's going to be measured. That's going to be looked at. That's going to be determined. That's going to help qualify you or to disqualify you. And you don't have to worry about that with your own bank, Melissa. You can know that you're in control. You make the decisions. You can look in the mirror and say, self, can we get a loan today? It's totally up to you now. Isn't that a great place to be?
Absolutely. So,
yes.
Did I get a loan today? That part.
That's right.
I love that. You know what, Mr. Chamblee? That's the power of control.
Yes, that's right.
That's the power of you saying to yourself, I'm going to go to my bank, the Lambert's bank, and I'm going to put in that I need 90%. As long as you have money in it. Listen, y'all can't borrow something that you don't got. So understand the concept. This is not you having money. You got $5 but want to borrow $10,000. Make that make sense.
Yeah.
You are going to make sure you fund your policy and be an honest banker to your policy. So when you have enough equity in your bank, you can now borrow 90% from that, and you can go like Mr. Chamblee say, self, I need $5,000 now. Self, I'm going to pay myself back with not just with the 4% that they're going to tell me, but I'm going to put myself, get an extra 5% on that top of that, and I'm going to pay myself an extra 5% back. Self, make sure you're going to pay this back within the next year or so, or I'm going to start paying this back a year from today. Because I have control, Mr. Chamblee, guess what? I can dictate when I pay, how much I pay, and how it's going to be paid. Is that correct, Mr. Chamblee?
That is absolutely correct. And that is the beauty of it. So you're not under the duress or stress of having to pay a loan back on time. We think about the pandemic that's just happened, Melissa, and at this point we had already had thousands of clients, and it was a good feeling to know that they didn't have to pay loans back they have gotten out on for their needs, wants, and desires. They put a freeze on their own account. It says, look, we're gonna get back to you when we get through this pandemic. They had that opportunity to be able to do that. And some people could not work. And because they had loaded so much money in here, they was able to now borrow money from themselves, right, in this system, but not affect the growth of their money, because the borrowed money is not coming from their account. It's coming from the insurance company's on general account. So it's just like a 401k. Imagine if your 401k allows you to take money out and not affect the growth in the amount that you had in there before you took it out. That doesn't happen with a 401k or 403b. When you borrow money from a 401k, it's dipping down their account. So that account is only growing by the rate of what's in there, because that money you took out is gone. And that's where here it's a beautiful thing to know that you can get a loan and you know that the whole full amount is still there, because the money that was sent to you is out of the general account of the insurance company. Hopefully everybody's getting that, because some people miss that. They miss the idea. It's not being borrowed from your money. It's not being taken out of your account. If you have $50,000 in there and you borrow 30, you still have $50,000 in your account growing at the respective rate of return that has been given.
And that's the power, Mr. Chamblee, of uninterrupted money.
Yep.
Your money is still in your bank.
That's
as
right.
your cash value is sitting there, even though you're borrowing from the cash value of that policy, you're borrowing other people's money, like what the banks normally do, borrowing your money. So this time you are the bank, you're borrowing from the life insurance policy while your money is still sitting there, growing uninterrupted. So again, you are tuning and listening to Melissa Lambert, and it's always an honor to have this wonderful man here. He's my mentor, my leader, and he's my partner within this amazing company, Lambert Legacy Financial Partners. Lambert Legacy Financial is powered by Core Financial Partners, and he is the CEO and the president of Core Financial Partners. And it's always an honor to have him come in and educate us, y'all. Listen, if you stop learning, you stop growing. When you tell yourself I'm good, that means you will not grow. When you tell yourself, you know what, I ain't got time for this, you stop growing. Because guess what? Regardless of the matter, your money is moving. Every second, every minute, every hour, every day, every week, every month, every year, you are moving them greens and them coins. Okay. So we are teaching you the truth about what they have left behind and kept a secret all these years. Core Financial Partners, now with Lambert Legacy Financial, we're coming through, y'all. We telling you the truth. We ain't gonna hide it from you, because guess what? We don't get paid just to give you this information. We get paid to make sure that you know the information. You get indoctrinated so you can tell your sister, your brother, your mama, your daddy, everybody you know the truth. So, Mr. Chamblee, I appreciate you, sir, for your dedication with Core Financial Partners and all the corepreneurs that are out here really making a difference while making a living with this process. So I'm going to kind of move this around, because we never get a chance to touch on this subject, this one question, when we talk on the air. So how can an IBC policy help you manage and fund unexpected emergency or opportunities? Because they need to understand that even though emergencies and opportunity comes, because they have this policy, they can utilize it for emergencies or for opportunities. So share with us, how can a person that has an IBC policy use and manage that for unexpected emergencies and opportunities?
Sure. And both of them, you might need the money almost on the drop of the dime, like within 24 hours. You do have a position as a policy owner and holder to be able to make a phone call to the mutual insurance company and ask for your loan to be expedited. And doing that, there is, to get it, I'm talking about within 24 hours, to get it done in 24 hours, longest 48 hours, all you have to do is let them know that. And there is a $14, different companies, different amounts, but the most I've seen is around $14, $15 to get it expedited. And it's wired directly to the account of your choice. And so to do that, if you have an emergency, which you will incur emergencies sometime in life or sometime in the near future, we all run into emergencies. They don't have to be dire, emergencies where, life and death is involved, but emergency because maybe new tires, maybe traveling because of a loved one that's needing you or something like that. You can get that loan and put into your account within 24 to 48 hours. Like for instance, I recently did it myself. As long as I get in contact with them, 10 o'clock Central Time, 9 o'clock Central Time, 10 o'clock Eastern Time, they would have that money in your account that day. So keep that in mind. So when it comes to emergencies, you can be sure to know that that money is going to hit your account. When it comes to opportunities for entrepreneurs out there or people that want to buy income producing assets, you once again can call for a loan. If you got time, you can have it in your hands within a week's time, 3 to 5 business days, I would say. And in doing that, you do not have to give an answer to why you need the loan. You can call a traditional bank, Melissa, and file for a loan and not have to give reasons for the loan and why you want it. Matter of fact, they might even want a business plan behind it if you want to use it for a business loan. Well, one thing I know for sure, they're not going to give you a loan for an investment. Like you can't say, I want to get a loan from a traditional bank because I want to go buy some stocks and bonds on the market, on Wall Street. That ain't happening. That is not happening. So here, no questions are asked. You're the decision maker when it comes to what you want to do with it. And it allows you to now make some moves that most people are not normally able to move to make without using their own cash. And that entrepreneurs are under the sound of my voice, you now double dip it. If you can use this money for an opportunity fund and you have a real estate property that you can purchase and rehab, you can now borrow the insurance company money, go rehab that money and make profit on that when you get renters in here and you still growing your account uninterrupted. That's a powerful position to be in.
That is truly a powerful position to be in. And I think about when you say that powerful position that we need to be in, I think about the newest video that we have on corefinancialpartners.com, the Rockefellers. The Rockefellers did that. So I want you to kind of because people know that name. When they hear the Rockefellers, they know who that is, right? They have created legacy on top of legacy where their money don't run out.
That's right.
Waterfall. So, Mr. Chamblee, I want you to kind of tie the two together to talk about the same so that people can understand you don't have to ask permission you have to ask for your money, but you don't have to give a reason why you need your money. And you are touching their money, but it's not really, and your money's not interrupted. You're actually borrowing from the policy. And guess what? You got a chance to pay it back whenever. And you have that emergency fund. Something happens, 24 to 48 hours the most. The money is wired to whatever account you choose. But the Rockefellers created the same concept over time, and that's why their family legacy live on today. So talk to us about how the Rockefellers and what we're talking about today, how it coincides together right now.
Sure. It just proves the principle has been around for well over 100 years. It's not new. It's just new to us. And so when we discovered this, Melissa, we made sure that like you're doing now, we just wanted to yell this from the mountaintop. And everybody that knows me, you can't shut me up about this. And it's all about my care for you and your family and everybody that's serious about their financial future. The Rockefellers saw this and said, look, well, why are we going to position ourselves to use monies out of our accounts and be gone and dissipated forever? Why do that when there's setups through mutual insurance companies that allows us to use the cash value in the way we desire, right? You have the power and the control of these accounts. You can do things with this account that the insurance company can't even do, right? And that's where it's a deeper layer of understanding of that. And if you don't mind, Melissa, we have a masterclass coming up. If you're really interested in this, learn about our masterclass that's coming up in November, and I would attend that if I were you. But the Rockefellers just knew that this is where they're going to run their business capital through when it comes to overhead, when it comes to startup, when it comes to payroll, making payroll, all these things. This is dollars that could be gone forever. Here's what they understood as well, because Rockefellers have businesses. You ever wonder what these corporations are doing when it comes to paying for elite types of benefits that these corporations are able to give to their employees, because it's like everybody's trying to do the best for their employees so they have a great benefit package. Well, the Rockefellers knew it well enough that they paid for their benefit packages for their employees through this infinite banking concept. So they didn't use their own money to pay for the benefit packages that these great employees that stayed with them for decades was able to acquire. They used somebody else's money. They used the insurance company money. They leveraged their banking system with infinite banking and used the insurance company money. You ever think about how do these corporations, even the banks, pay for the top executives that help run their company, that brings them multi-millions of dollars every year? They pay them like in the millions of dollars, like a couple $1 million a year for a bonus, right? Mm-hmm. Do you know that money is borrowed money from their insurance company? They have millions in account. They can pay straight directly to that executive or executives, but they know better than that. They understand. Write this down. I always got to say this: capital has a cost to it.
Yep.
And they understand that. And so what they do is they call for a loan. I got this executive. They don't have to answer to them, but this is what they're saying to themselves: that I'm going to pay $2 million, but he just made us $30 million. We're going to pay him $2 million. And guess what? They're not even using their own money. So here's the beauty of this. Watch this, Melissa. Here's the beauty of this. That executive has a policy that they own. That executive, once again, is insured on a policy that the corporation owns. So they pay the premiums and everything. Mm-hmm. They build it with money, and then they give it to him an executive bonus. But because they own the policy, when the executive dies, they get all their money back. Isn't that crazy? They get all their money back. The same money that executive is helping them to grow their net worth, they're using a portion of that to say, look, we're going to sow into this executive to make sure him and his family is good to go. And then we're going to make sure every year we're giving them bonuses to keep them happy and not have the competition code steal them from us. And then after all said and done, the executive retired, passed away, all that money comes right back to them tenfold. And they split it. They might split it with the family though, right? Because it's probably at this point that grew to $20-30 million. That's the game that the corporations and the banks are using and leveraging this same very concept that we're teaching you today. And the Rockefellers are one of the first ones that understood that.
I mean, you just got me excited, Mr. Chamblee, because that right there was a light bulb. Let's think about it, y'all. Listen to me real clearly. Listen, y'all. Just imagine every job you've been on. Mm-hmm. They don't ask you if you want insurance. They give it to you.
Yeah.
Just think about it.
Yeah.
They don't ask you. They make it seem like it's something good for you, not realizing it's a benefit for them because they can borrow from the policy, pay you whatever they want, knowing that God forbid anything happened to you, the policy, whatever they borrow is going to come out of the debt benefit anyway.
Yeah.
And the money comes right back, cycle money, cycle money.
Yeah.
Like, I get so excited about knowing the fact that we know the truth about money now than ever before, because at 43 years old, it took me, I've known you, Mr. Chamblee, since the starting point of Core Financial. It took me a longer time to get here because I believe in season and time.
That's right.
I believe that God's timing is always the best. And I'm so thankful that after 5 tries, I officially became licensed.
That's right.
And I'm just honored because now that this license is now behind me and I'm moving forward in the understanding of infinite banking concept, we are growing our knowledge so we can really help as many people understand the power of having control of something you work hard for. You work 40 hours a week or more for something you can't even control. You can't go to sleep because every time you get a Monday coming around, oh God, I gotta go to work. and you don't even have control of it. They got to tell you how much you can take out on a daily basis. You got to ask permission to go over their daily limit.
Yeah.
Make that make sense on your own money.
Yeah. Yeah.
You know, Mr. Chamblee, this is just, ooh.
Yeah. It's deep. The more every time we peel it back a little bit more, the more I'm blown away. I'm just like you. I'm just like, every time I hear it from a different perspective or a different layer, it blows me away. Here's what I'm going to put out there, because I want everybody that's under the sound of my voice to get with our consultant through Core Financial Partners and get an invitation to our masterclass we're going to have in November. What I'm going to lay out at the masterclass, how do you create a legacy through the matriarch in your family? Because think about it. Most matriarchs are still like, most people are, when they retire, they're living off their family, friends, and the government. How about all the kids and the grandkids that have have careers and jobs that they can sow into the matriarch of the family, or someone that's that's the senior in that family, and take care of that person with your resources? And like, say everybody do 5% of their income, 10% of their income, they taking care of those seniors in that family, right? And Melissa, it's through policies. When they go to the other side, when they go to glory, right? That death benefit is going to pay them back plus more. Think about it. So I'm going to break that down and show people that want to think about doing something like that for your family. That's something LaToya and I have had a presentation on that for a while. We've never really shared it with the public, but I want to share it at the masterclass that we're going to have coming up here pretty soon.
Wow. I mean, I just thought about just what happened today when you showed me a policy on somebody that is dear to my daughter, right? And I saw how much that person is worth when they transition. I said, my God, like, how does policy start at a certain number, but 10 years later, it's almost $1 million?
Yes.
God forbid this person passed on. My daughter is taken care of. My daughter be a millionaire when that person passed to the other side.
Yes.
And it's because the way we set it up.
Yeah.
And I'm just blown away, Mr. Chamblee, that people still have the nerve to say, oh, I got to think about it. What you thinking about? Like, what we thinking about?
Yeah.
What's the other crazy part is when people say, I can't afford that right now, but you can't afford that, but you still put that same I can't afford money in your traditional money, that bank account that's not making you no money.
Right.
Make that make sense. You can't afford it, but you still put money in a traditional account that they control, that you not getting no dividends on, and you still around the cycle still, I'm not going to say the word broke, but your cash ain't flowing right as it's supposed to. Right. Okay? Mr. Chamblee, we're in the know.
Yeah. We're blessed. We're blessed. We're beyond blessed. Because you think about it, look, I didn't learn this until my mid-40s, Melissa. And when I did learn it, I was that person that got really upset. I was bitter. But it was brought to my attention, don't get bitter, get better. What are you going to do now? You know it now, right? Now when you know something, you ought to do a little bit better and take advantage of it. We can't change yesterday. We only have control of what we do today and tomorrow. And so if you're under the sound of my voice, the time is now, right? Time is now. If you're not ready, the only reason someone is not ready, I've done this a long time now, is because they don't understand it yet. Nope. They don't understand it yet. Because we're not seeing, ladies, listen to me. You still can go shopping. And I'm not being chauvinist with this. I'm just saying, because I have a wife and 3 daughters. You still can go shopping, but take it through this. Men, you still can go and hang out. You still can now be an investor. You still can do this, but you need to take it through your bank and use somebody else's money, OPM, not your money. Everything that we're seeing, you still can do. You still can get rid of your debt. right? So some of us are thinking about getting rid of our debt first before we do this. And I get it. But if you really understand that this is set up to get rid of your debt by purchasing your debt and still growing your money and taking care of your debt at the same time, you wouldn't even think twice about it. That's where they have to go and look at our coredebtstrategy.com video. Take that 12 minutes, and it would change your view on how to take care of all the debt you have, including your mortgage, right? Mm-hmm. So to me, I've learned to just continue to put the information in front of individuals, Melissa, and pray that they pay attention and that they come to their own rescue by reading the suggested books, even the books that you seem to not be in position to read yet because of your busy schedule. Get it on audio. Get it on audio. Get the book. If they're on audio, there's a lot of information on videos. Our website is full of videos, and get your understanding level up so you now can be that difference maker, be the breakthrough person for you and your family.
And I mean, again, the greatest thing I know about reading is whatever you need is in a book.
Yep.
The worst thing about reading is not doing it at all.
Yeah. Yep.
You can find gold in a book, y'all, and you cannot find nothing because you haven't picked up that book. You know, I was doing a seminar in the month of August, and one person said to me, as I think she would look like she was in her late 40s, she said, "Oh, I don't read. I won't read nothing." When you don't read nothing, you learn nothing.
Yeah. Yeah.
When you don't read nothing, you learn nothing. Some people are audio listeners. Yes. Even like Mr. Chamblee said, if you can't read it, listen to it. YouTube University is amazing.
That is so
audio
true.
Books, amazing.
Yep.
But do something and just not do nothing. So you are tuned in to Live with Melissa Lambert. It's an honor to have Mr. Tony Chamblee. He is the CEO and the president of Core Financial Partners. And we're talking about the truth about money, but we had a topic that we really touched on our subject on our live today on the radio, how to best use an IBC policy as your own bank. So I'm going to ask you another question, Mr. Chamblee. Can you explain how your money continues to grow within the policy, even while you're borrowing against it? Because we're telling people to use this as a traditional bank, and in a way of a traditional bank, borrow from it, be a good banker to yourself, pay yourself back when you can, all that great stuff. But explain to us how your money continues to grow within the policy, even while you are borrowing from it.
Sure. That's a great question. The reason why it continues to grow, even when you borrow from it, because of the relationship you have with the insurance company. One, it's a mutual insurance company that doesn't have shareholders. So who's part owner of the company, like in a equivalent to a shareholder, is a policy holder. So you're a policy holder. And because of that, they allow you to save money in this contract, which is a policy, and grow money there. And there's a couple factors that this money grows within. One factor is the interest. You have guaranteed interest that you'll never be able to lose money by it touching the principal. Second factor is that you have a dividend that's paid into your policy on an annual basis because you're a partner. Remember, mutual insurance company makes the policy hold partners. So you're part owner. So they're going to pay into your policy almost like a shareholder. Third factor is your contribution, your continuous contribution according to how many years you desire to pay to build it up, or how many next years it allows you to. So those are the factors I want to go over. So when you want to desire a loan, you can make a phone call and they're going to send that money to you. You can write this down if you haven't heard this before. 92% of your cash value could be borrowed against, 92%. So in other words, if you have $100,000 in that policy, you can borrow $92,000, no questions asked. It is a guaranteed loan. Now, when you do borrow the $92,000, you can rest assured that $92,000 that is going to be put in wired into your account is not the $92,000 out of your $100,000. It is out of the general account of the mutual life insurance company, right? And by the way, this has to be a whole life policy, y'all. Enough of the IULs and things of that nature. It does not work with that because you cannot use the money the same way, and they do not pay dividends to IULs. So I just want to say that real quick. So when you're doing this, Melissa, you're able to borrow against your policy, not from your policy. So that means your whole $100,000, let's say the returns are averaging about 7%. So that means your policy is going to grow month after month, year after year, decade after decade, even if you don't pay the $92,000 back. Now, the reason why they're able to do this is because the collateral position is going to come off of the death benefit. If somebody has $100,000 in there, let's say they have a policy for $1 million for death benefit. The $1 million death benefit is going to be decreased $92,000. So that means $908,000 would be what your family will receive tax-free. So the collateral position is against the death benefit and is reduced down to what the outstanding loan is if that person ends up transitioning right before paying the loan back. So the beauty of this is that you have what we call economic value added. Even while the loan is out and not repaid back yet, your money's growing at the average 7%, as we talked about, and the loan is going to cost you 4%. So you have a net gain of 3% on every loan dollar that's out there, every loan dollar. And that allows your account, even if you didn't add anything to that 100,000, every month and every year, it's going to continue to increase. It never stops. But that's not the only thing that increases. Even if you stop paying, like say you paid it for 20 years, you're not paying no more, your cash value is going to continue to increase. So will your death benefit. As you just mentioned, the death benefit increases every year for the rest of your life, and the whole life meets up with your cash value at 121 years old. It matures. It is called it endows. Endows mean if your policy was $1 million policy, that means your cash value is going to be at $1 million at 121 years old, no matter what. Or it's not mature yet, right? It's not mature. So that's how it works. And the beauty of it, when we look at them, I just know I put somebody in a better position they were before, no matter where that saved money was at. In their future investment money they put themselves in a better position because they're using somebody else's money to invest in you and have volatility and speculation on the market, or even a real estate investment. Why use your money for a real estate investment, right? But somebody else is going to give you that money to make that work and make that happen and make it profitable later on. Why ever use your own money when somebody else is willing to give you that money?
And I'm glad that you even said that. And one of the reasons why I was able to assist someone that Chelsea loves on getting his own bank was because I mentioned that, knowing that he wants to buy a house. I said, when you think about it, I said, you're going to try to save this money anyway as a down payment. Use this as a way where you're borrowing from your own bank to put down on the down payment of your house. You're borrowing from somebody else's money anyway, while your money is still sitting there making money. That was what clicked for this person to decide that he wants to get a policy on himself. Why? Because he can use the same policy, borrow from it to actually put down a deposit on his first home. So, Mr. Chamblee, as we wrap up, I'm thankful. I keep on saying the word, and I have to show gratitude, because if it wasn't for you and your wonderful wife, Latoya Chamblee, and the core family in itself, I want to be in the position to share this knowledge to people I love, and trust. Even my haters that's watching, they can hate all they want, but I'm still going to help you Why? Because it's in me to see you succeed. It's in me to see you unlearn the information that you were taught. And I said something, and I don't like to use this word, but in a way, I feel like we're still in slavery in our mind. Yeah. We're still in slavery in our mind because we are thinking what they're teaching us is all golden, not realizing they're profiting from our efforts, profiting from our sweat equity, profiting from everything that we have been working so hard for. And we hear the word in the Bible, it says, leave an inheritance to your children. How can you leave an inheritance and a job?
Yeah.
This is the way for legacy to live on, just like the Rockefeller did. That legacy can still live on through the waterfall system, which is still infinite banking concept. So wake up, everybody. Yeah. It is time. Get in contact with a corepreneur that showed you this video. If you don't know a corepreneur, here I am. Melissa Lambert is in the building. And Mr. Tony Chamblee is my partner. He's going to walk me through and walk you through the entire journey so we can make sure we set you up for success. So, Mr. Chamblee, what are the videos what are the links that we can actually send them to so they can be more informed before they hit and speak with us as corepreneurs?
Sure. Let's go straight to learnmorewithcore.com. Learnmorewithcore.com is a link that leads you to a video series, and that video series is up to like 15, 16 videos on there, and most of them are only 2 to 4 minutes long. It's one on there that's about 30 minutes long now that we just loaded on there, that if you're a person that's wondering and want to compare this to an IRA or like a Roth or something like that, you want to go watch that video, and you'll get a lot of education on the comparisons when it comes to the two. And remember, I am not against anybody doing any of those other things. It's just, why put your hard-earned dollars directly to that? Why not pass it through this and let the insurance company funds be the risk taker, not you? That's all I'm saying. Okay, so that's number one. The second one would be, we went over it already, coredebtstrategy.com. The coredebtstrategy.com. Go there, take 12 minutes out of your life and watch something that's going to make sense and bring home how you can take and bring it down 1/3 of what it normally take the whole 100% of the time to get rid of. If you have a 30-year mortgage, that is going to show you how to get rid of in 10 years. If you have car notes and all that, break it down to 1/3 of the time that it normally takes and build your wealth at the same time. That's what that video is going to do. Also, I would actually encourage you to have Core Financial Partners saved, corefinancialpartners.com. Core Financial Partners has a smorgasbord of resources on that website, giving you in all kinds of ways of how IBC work or how it could work for you and your family, or from an entrepreneur standpoint. And go there and just be a part of you learning this. The consultant that you can be working with definitely is going to educate you and inform you the way you're hearing us today. But do some of your own due diligence as well. Have a resource center for yourself, and we provided that at corefinancialpartners.com. I think that's it, Melissa. Core Reads, thank you. Corereads.com. Core Reads is getting the book where this derives from. This derives from Mr. Nelson Nash himself. Mr. R. Nelson Nash discovered this through him going through trial and error with his finances some years ago. While he was on his knees, he was blessed with the information put in his mind and his heart on he was living in the solving of his situation because he had policies already. And he just started thinking about it, and it was dropped in his spirit on what to do. And that's how this derived. That's how this started. He wrote the book in like year 2000, somewhere around there, the Become Your Own Banker book, and it's on corereads.com. It's the very first book on it. It's only 92 pages. Someone can get through that book in no time. But take your time, read through it, and read it second time and a third time. And then the second book on there, The Path to Financial Peace of Mind, definitely is a piggyback off of that book. That author, Dwayne Burnell, was mentored by Mr. Nelson Nash. So you have two great reads right there, and both of them is a weekend read. Both of them are weekend reads. So I would go there. And the person that you could be working with or should be working with through Core Financial Partners, have another list of books as well outside of that website. We just know that it takes a person that want to be a part of the education and information that's available to get that information and start diving into it. It makes a world of a difference. That's why we do the masterclass. This is something ongoing. You cannot get it all in one sitting, one webinar, one live YouTube. You can't get it in one. It's a process to really capture all of what it does. So Melissa, I'm excited. I know you're doing the right thing by putting this out in the public the way you are. I'm here. Whenever you need me, you know, we look at my calendar, we make it happen. And I know this month is what? The month of life insurance awareness.
This month,
right?
Absolutely. And again, you are just truly what you said you are. You are about your business, but you also are a man of your words. So again, guys, thank you for tuning in with Melissa Live. We had the honor to have and grace on the platform, Mr. Tony Chamblee. He is the CEO and the visionary of Core Financial Partners with his lovely wife and all the corepreneurs that are out here. So we had a great session, y'all. I mean, the truth about money is being told, and you're hearing it here with Lambert Legacy Financial, powered by Core Financial Partners. Mr. Chamblee, we thank you so much again, sir, for always being truthful about this information with the passion you bring and the purpose you bring. I truly know that you will have this crusade, not just here in the state of Florida or in Delaware, but in every part of the United States, because we are in all states. So thank you again, Mr. Chamblee, for just being who you are and for sharing this information. Please go to, again, all the different links we share with you, but I'm here as if you don't have a core consultant, my name again is Melissa Lambert through LambertLegacyFinancial.com, LambertLegacyFinancial.com. Until next time, y'all, take care, take charge, and continue to be great. Bye for now.